What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is February 19th of 2024. Well, folks, I hope you are having a fantastic day wherever you are, because in today's Macro Monday, we've got a jam-packed episode where we're not only going to be talking about a potential correction over the next couple of weeks for Bitcoin's price down towards prior resistance in order to see if there's going to be the foundation to move higher. I want to talk about why we believe that this correction is going to be playing out and what to watch for. But beyond that as well, I want to talk about the broader macro scene. I want to talk about global equities and how we're starting to see some signs here of some big even targets getting hit here across the major indices, and how we might be expecting at a minimum a healthy pullback, and whether or not those support bands that we're watching, if we're able to hold, to either prove that we can go higher again, or if we're in for an even more substantial correction than the one we're talking about today. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like. It's one of the greatest ways you can support the channel. And let's go ahead and kick off the rambling. All right, guys, I want to go ahead and start here by talking a little bit about Bitcoin, because Bitcoin overall has not made any substantial downward moves yet. It's holding sideways. It's definitely holding up well, considering that it just broke above 50K back about a week and a half ago. So I'm not here to make a huge scene so far about price, but what I want to warn you guys about is talking a little bit about the dichotomy between price action and inflows. Because as many of you will note, over the past week or two, I think I've been very fair in this regard. I'm looking at the numbers. I'm a numbers guy, and I've pointed out rightfully so that the inflows look very impressive. If you look back from, say, a month ago, like in the initial couple of weeks of ETF flows, these are just a selection of a couple of days here from, say, early February and mid-January, right? When those ETF products launched back in January, we saw days where net overall, there was a couple hundred Bitcoin being added on a daily basis. Nothing in my books, which is exciting in my opinion. On the other hand, we have seen a change of character here where there is thousands of Bitcoin being acquired, even if you consider outflows from GBTC, which I think is a fair thing to do. And as much as I pointed out in the past that when we had those GBTC outflows that really made the ETF inflow numbers look a lot weaker, right? At the same time, I'm going to be fair here and say that the total daily change, when you consider for GBTC and you're getting thousands of Bitcoin, that's definitely really exciting. That's a much better situation than where we were back, say, a month ago. And if this continues here, I think this is definitely going to be a positive sign for the year to come, for Bitcoin to continue moving higher. However, there is one important thing that I want you guys to know about, and it is that ETF inflows alone are not going to guarantee Bitcoin moves up in price. And I understand you might be a bit shocked to hear that. You might be saying, Nick, weren't you just saying a moment ago that you thought the ETF inflows were bullish? It looks good. Absolutely. It's definitely a net positive. And the same goes for the halving event. Those two combined should definitely put Bitcoin in a great position for the next couple of months in a situation where someone might want to sell a large amount of Bitcoin. That kind of demand can help to stomach some of that. However, it does not guarantee that number go up, as people say. And as we've seen here for the past 5 days here, we've seen a good demonstration of that. We've had some of our strongest inflows here over the last 5 trading days. Now, of course, to be fair here, this is going back, you only get inflows here on weekdays. But really, if we take it back here since, say, the 14th, right, when we came up here and hit 52K, we take a look back at the inflows. Since then, we've had 6,748 Bitcoin on the 14th. We had 8,421 on the 15th. And of course, on the 16th, on Friday, we saw around 6,800 BTC. Now, these are all great daily inflow numbers. And if you, again, add that in, if we keep this up with the halving, that should be a generally bullish thing. But what we've seen here over the last 3 days, the last 4 or 5 days here, is stalling in price action. So what gives here? What's happening? Isn't it that because you have ETF inflows, the number has to go up? That's not exactly true. While this is definitely adding upward buy side or demand side pressure to Bitcoin's price, it doesn't mean that you can't have that outweighed by people who are trading on the spot market, who are essentially trading by other means, to unload and cause market sell side pressure or distribution. All right. So this is an important dichotomy for people to understand here, that if you continue to see price action holding neutral here, it is very likely and very plausible and not a crazy ask for price to come down to where it was, say, 8 days ago from where it is now. essentially to cool down towards 48K or even come down towards one of these prior mid-range lines like down here around 47 to 46.5. Now, I'm not saying you should wait and go all in at that level or anything. I'm not here to tell you guys you have to even trade that. I'm just saying to be made aware of these things and to consider here that ETF inflows are important to track, because if this is not sustaining Bitcoin's rally, right? And we're starting to see a stalling of the trend here, it may mean that this is a distribution range. This is a range where some very large holders of Bitcoin outside of the ETF are starting to unload positions. They're starting to, essentially unexpose themselves to crypto assets and go back into fiat currency or whatever asset they're trading against. And it's important to note these kind of things when you've had a week like we've had in altcoins. We had a phenomenal week across the board here. Many altcoins in double-digit territory for the last 7 days, and a couple of cryptos, of course, in single-digit moves to the upside or slightly to the downside, give or take. But overall, these were really impressive numbers for the past week. And I think, again, after you have these kind of moves, you have to be a bit cautious, not to mention the prior week before that was relatively good. Ever since late January, we've had some great run-ups following this rally in Bitcoin. So don't be too shocked if you get these types of pullbacks, especially when you're approaching the big even level of $2 trillion for total market cap, right? These are very important psychological levels. We saw resistance back here between January of 2022 and also here in April 2022, give or take around this $2 trillion figure before prices move lower. And I'm not saying here that this is the absolute top or end all be all for crypto. I'm just making it very clear here that there's a good chance when you start to hit these big even levels, when you have great weeks of price action, and you're starting to see a stalling of the trend on Bitcoin, which usually leads ahead as it is the focal point of this rally in crypto markets, then we need to be a bit cautious about FOMOing into altcoins at these levels and just going all in and expecting that number go up 24/7, right? And that's a big problem in the crypto space, is that people will get caught in this dichotomy that because of one metric, because of one data science model, because of one rational reasoning that may very well justify why price might be going up over a longer period of time, that just because that is happening or because we have that going on, it means Bitcoin is guaranteed to go up forever. And it's just not true. Now, again, I'm not going to deny it. The ETF inflows and the halving event are two of the biggest things to happen to Bitcoin in a long time. And if they continue to keep up at these levels, that's going to be great news for Bitcoin, and it's going to make it more resilient. Doesn't mean that day by day, every time you have net inflows from the ETF, that its price is going to go up. There may very well be large whales, large holders that are unloading more heavily than those ETFs are buying, and therefore prices can move lower in the short term. That's all I'm saying here. And if anyone tries to tell you that that can't happen, or they tell you that I'm being too bearish on it, I'm not saying you can't DC, I'm not saying you can't have positions. All I'm saying here today is to realize that fact. And some people, unfortunately, will lie to you. They'll say that that can't happen. And I think that that's quite deceiving. You need to be prepared for that. And if you're starting to see not only the ETF inflows not driving prices higher here at these current levels, but that they start to decline, that can be your warning sign for more pain to come over the next couple of days, weeks, and maybe even a longer term trend shift. Got to be ready to stomach that and be prepared for it. Have strategies built in any scenario. Now, I want to go ahead and talk a little bit here about the S&P 500, talk about global equities. Global equities since back here, really since 2022 in October, but really I want to emphasize since back in October, have gone through a solid tear here. From late October, we saw the S&P 500 go from 4,100 all the way up here towards right above 5,000 points. Now, to put this in perspective, this is higher than where we were back in January 2022. So equities as a whole, in the S&P 500, which gives one of the more broader and I think fair measurements of the broader equity markets, the 500 largest companies out there, those stocks, net overall, are worth more than where they were back in December of 2021. And I think it warrants some fair concern here that we may very well be witnessing, and before maybe a longer term continuation that could very well play out, at a minimum, a solid deviation above those prior highs that will be met with some type of healthy correction where price action starts to establish lower highs and lower lows for a couple of days or weeks. I'm not calling for some absolute massive collapse of any grand proportions, but I think that it's fair here when you had the move the other day our markets realized that a lot of the interest rate cuts that had stimulated this rally here for the past few months are likely not going to be playing out, markets will start to reprice that to an extent. And I think that we can see here with the S&P 500 being at 5,000, the NASDAQ playing around at this 16K range here, which, bear in mind again, is where we topped out last time. So we're at the same kind of euphoric valuation premium that we paid for tech stocks back during the COVID bubble, where liquidity seemed infinite, the money printing was out the wazoo, and central banks right now are doing nowhere near that type of stimulus. So bear that in mind here. And bear it in mind as well when you see the Dow Jones starting to flatten in its trend here, giving us signs for the past few months that while it's still moving higher here, the 21-day is not moving up as sharply or aggressively as it was back here during December. So that trend is starting to potentially slow down here, especially as we are well beyond the prior highs back in January 2022. Again, equity markets over the long run, asset prices as a whole usually move up and to the right. And I'm not here to disregard that or the fact that we may very well be, in the long run, maybe entering into a new bull market for equities and assets as a whole. But I don't really see that happening right now, not to mention in an environment where we are prepping, according to the yield curve, for a recession in the next 6 to 12 months. I think in the short term, you can have a Goldilocks period, but even Goldilocks periods have pullbacks here. So make sure that you're buying in at a fair entry here, where you're going to have a much better risk setup here, risk-adjusted setup for your trades versus just chasing. This is a big problem that I learned about over the past couple of years, which is that, a lot of people want to chase a trend in this case, and they buy in, unfortunately, way too late into the trend. So you really have to make sure to keep yourself moderate, guys. There are a lot of people out there telling you need to buy this, you need to FOMO into that. And while there are great returns to be made, there's nothing wrong with trading the trend. You buy the trend on dips. You can trade the trend above things like the 21-day, but once you get those breaks, you wait for longer term moving averages like the 100-day pocket, the 200-day pocket, or the Lux Algo support band. These are the kind of things that are going to give you much more favorable entries and allow you to get in on the ground level on some great moves, just like back here in October. If you would have simply just bought here around the 200-day or around the weekly support band on Lux Algo, you'd generally be getting right near the bottom here, just off a couple points here in the S&P 500, and then you could ride the wave. It's really that simple here. But if you go ahead chasing in at these higher prices, and sure, no doubt, maybe it continues here to say 5,100, the problem is that you're chasing very weak returns and potentially setting yourself up for a lot of potential pain versus any potential reward. There's a big mistake that people will make here. So you can still be bullish long term, but be bullish and buy in on corrections. If you have conviction that the trend is going to continue moving higher and the long-term trend, the long-term chart is showing good strength, buy in when no one wants to in the near term and be able to get discounts at much better rates than your other trading counterparts in the market. These are very important principles that you can keep in mind here. And the same goes here for Bitcoin. The time to really get bullish on Bitcoin here, or not per se get bullish, but buy your positions on Bitcoin was post-ETF when everyone was selling the news essentially. And if you've had conviction that prices were going to move higher, right, what we talked about, again, that bounce off the 100-day was what we were looking for as the first entry target. In that case, Bitcoin bounced right off of that range. And it continued onward and onward here for the next couple of weeks. So that's the kind of mindset that I think is important to instill. Don't be buying in at new relative highs. Buy in when you get solid corrections in the market at solid moving averages or nice support indicators like the ones we discussed, like Lux Algo here in this channel. I'll leave a link down below in the description if you guys want to set up the Lux Algo indicator suite. It's a really great suite, and we just use the signal and overlay indicator here on the channel, but there's also the price action concepts indicator and a whole range of other things that can really help you get that edge on the market versus other traders who, again, might be not having access to those tools to be able to understand where potential support and resistance ranges might be, or where large sizable volume is traded to understand institutional buy ranges, or essentially accumulation ranges, as well as resistance ranges, areas that there might be distribution. So there's a lot of different things to keep in mind here, guys, when it comes to the market. But overall, when you get a week like this, make sure you don't fall for the FOMO and buy in at new relative highs. Wait for solid pullbacks on strong market leaders and watch for plays that are resilient at those moving averages, not plays that are just at the greatest discount, right? We want to find nice discounts on strong players that have consistently shown up to the plate and been some of the top performers in the market. Now, one last thing I wanted to talk to you guys about here as well is coming here towards talking about tax season. So it's February 19th, this is the day of the recording. And while there are definitely a lot of exciting things going on in crypto, and we're looking forward to 2024, we're going to be talking about Bitcoin infrastructure. We're going to be talking about a whole range of different topics out there that we're excited about. DePIN, a lot of the narratives in the altcoin space. It is important above all that you make sure you're prepared not only for the next year's tax season, where you have to basically compile all your transaction activity from in 2024, but also if you're in the United States like myself or you're a citizen, you essentially have to make sure you get ready for tax season in April. And it's important to go back and get all that information from 2023 in a proper format so you can make sure to report your taxes properly. That's why I definitely recommend to make that job so much easier to check out the link down below in the description and register for CoinLedger. You can try out the application for free, plug in all of your exchanges, plug in all your wallets. You're not giving them access to trade or access your wallet, but rather the data here in this case, in order to get a full 360-degree picture of all your income, taxable events, or tradable events, where essentially, or taxable events for trading activities, where you can essentially make sure you get a full profile of all your tax liabilities, or even maybe potentially tax write-offs, depending on whether or not you made or lost money. So I definitely recommend you guys use it because you only have to actually pay for the platform when you want to generate your tax form. So if you're not satisfied with it, that's totally fine. And even in the meantime, you can try using the platform as a portfolio tracker or a performance tracker over the long run. CoinLedger is a really great tool. They're our official tax partner here on the channel. And again, you can get 10% off if you use the link down below in the description on any of their different pricing plans. If you're not trading that much, the good news is it doesn't cost that much. But if you're somebody who's really active in the crypto space, managing a large portfolio, then definitely check out some of the higher tiers here where you can get one that respects the amount of transactions or activity you might be doing in the crypto space. For those of you who are really active, day trading, doing activities in DeFi, CoinLedger has also got you covered as well. But even for those of you who might be just making a few trades each year, might be more long-term investors, in this case, CoinLedger can service you as well. They have a whole range of different really exciting features, but the platform itself is really streamlined and they'll walk you through the entire process. It's 3 simple steps to getting towards your tax forms. And I definitely recommend you guys at least give it a try and get ahead of the game on preparing for taxes this season. So anyways, guys, that's it for today's video. We're going to continue to watch how Bitcoin performs here as we start the new week here. It's important to see how those ETF inflows are going to continue playing out here for Bitcoin. And now that the week has started, the weekdays have begun, let's see if those inflows can continue and drive prices higher. We're going to be watching to see whether or not we can clear through 53K here over the next couple of days, because if those inflows are still remaining strong and we can, it might be a sign of something big to come, that there are some larger players offloading at these prices. And it's again an important factor. The higher prices move, the more distribution you will naturally see in practically all assets. That's an important thing to keep in mind here, guys. The higher we move up, the more likely people are to start taking profits from those existing holders in the market. And we've seen this time and time again. You see it in the data science models. And it's just true with Bitcoin cycles here that more supply starts to enter into the market when prices move higher. That's an important factor to consider in a world that's telling you that the ETF is the end-all be-all and that Bitcoin is guaranteed to go to $1 million or $500,000 or even $100,000 to $200,000. Time left to tell here. While I'm not saying that that can't happen, doesn't mean that it's guaranteed to. So, thanks so much, guys, for tuning in. As always, if you enjoyed this video, consider dropping a like. It's a great way to support the channel and the content we produce here. And until the next time, I'll see you guys at 6 a.m. Eastern Standard Time on Wednesday. Hope you guys have a fantastic rest of your day. I'll see you all then.